was our strategy for last week. So now we are going to see what happened last week. After the price opening, you can see the market straight away went and tested the zone. As you know that on Saturday the same thing happened. So the market straight away after the opening straight away went and tested the zone. You can see the date below. As we told, whenever we are placing a cursor on a particular candlestick, you can see the date below. So like on Friday, exactly like what happened on Friday, that previous week was that market opened around the zone, went and tested, and a failure to sustain above the zone pushed the market down. On Monday also the same thing happened. Market opened around 4,720 and it went higher, and a failure to sustain above the zone pushed the market down, and you can see the market came down till 4,660. You can see that the market came down till the zone and closed around 4,700. And the Wednesday on Tuesday also the market just opened below that, and you can notice the market came down and took some support around 4,660. That is the reason we have marked this line, because this 4,660 has provided a good support for crude prices in the previous weeks. So that is a major reason we have marked this zone. On Tuesday the market, after a drop, it took some, you can see we are enlarging this, after a drop it took some support around 4,660, and then it completely retested the zone of 4,760, and it came down, and you can see it took some resistance around 4,760, and it came down and took some support around 4,720 and closed around 4,750. And as you notice that on Monday we took a reverse strategy. That is that since the price has closed higher, or that is not on Monday, that is on Wednesday, we took some reverse strategy. That is on Wednesday, last week Wednesday, as always you know that Wednesday we have crude inventory report. That is going to be a very crucial day. Since the price was trading around 4,760, that was very close to this, and we took a reverse strategy around 4,760. If there is any price action above 4,760, we would have gone for a buying. But what happened is that unfortunately the market in the initial trading session there was some buying, but in the later session you can see when the inventory report was published, so the market couldn't sustain above 4,760, and again a failure to sustain above 4,760 pushed the market down on, where you can see that on Wednesday, and it is a very clear drop. And from that the market came down and closed near that 4,600, closed below 4,660. And on Tuesday also you can see it is a very drop down and a spike down opening. That is on Thursday it is a very dropped and spike down opening. What we call as a spike down opening is that where the market will open at this price point and the market immediately will spike down without giving us an opportunity for taking any trading decisions or trading positions. So the market is a spike down opening, and the crude continued its trend, downtrend on Thursday also, and you can see the price actions that happened on Thursday. The market came down till 4,800 and 4,480. The market came down till 4,000. Sorry, it was on Friday. The market came down till the zone, and it closed around the zone. On Friday also the market continued its selling, and the market created a low around 4,480, and it was a clear bounce back after that. You can see the market gave a bounce back after testing 4,480, and it went up till 4,000, and it took some resistance around 4,620. On Saturday the market closed around 4,600 zones. And one major thing what we are trying to say is that and we have noticed that a few of our own clients had made this type of trading decisions. They had gone short heavily below 4,500. It is a very simple logic. Even though the market was in trend, you need to apply a proper money management technique. It is a simple logic that the market, see from where the market has dropped down 4,780, it is a very clear drop till the zone. So there will always be a retracement. The market just like that, it will not continue dropping like that. It will stop somewhere, it will bounce back, and it will take some resistance somewhere, and then it will retest. That is how the market behaves. That is the structure of the market. It is the market dynamics. So we need to understand that we need to apply a simple logic why we are going with that much of exposure, even though even though it is with the trend, because as we always say that there are two major zones where we can target and which will be difficult for us in trading. One is that when the market is in consolidation, like what happened here. You can very well notice this, the market was consolidating around 4760 and it is trying to find some direction, and this zone was quite difficult, but it was with the trend and we have made something after the struggle, and it's a very good profit last week. And the other thing is that after making a good profit, it is our responsibility and duty to protect whatever profit we have traded. That is that the another major trading decision zone was that when the market is retesting. So this is the defensive area. We can go for an offense only in this consolidation zone, and we need to be defensive. We cannot put all our exposures. We should use the proper money management techniques, and also we should use our common sense while taking a trading decision, even though if it is with the trend. So after a huge drop, it is quite normal, and in every market it happens. But in crude oil, it is because given the rupee factor, you can see a weakening of rupee. The rupee is weakening a lot. Weakening of rupee is supporting the commodity prices. So that is also an influential factor. Whenever the market is giving just a bounce back, it is crossing 100 points. So that is another major factor we should consider while trading in any commodities. So what we can apply, what are the possible strategies we can apply for this week is that since the market has bounced back and closed, we cannot say that it has reversed its trend. The trend is still intact for selling, just because you can see the NYMEX prices, it is staying around $80. So last week the market was struggling to break $82, and it was quite comfortable in breaking that, and it came down till 77.3. So around $77.4, the market has came down till $77.4. In the next contract we are talking about that, and till $82, $82.2, we don't see the market has got a potential to bounce back. But it is the case in NYMEX, but we are trading in MCX, so we should look for the price action that is happening, and MCX also, and we need to make some fine adjustments and fine tune these NYMEX prices and also the MCX price. We don't want to continue confuse you much by saying various technical factors, but it is what we can do is that we are now going to look for various possible trading strategies in trading, and that can be applied in this week. The one possible strategy is that we can target 4720 zone. So this is one of the major factor. Now we have decreased the stop loss to 4760. So last week what we are following is that we were targeting 4760. This is the zone by which we were targeting, and today and for this week what we can do is that since we expect copper to continue its downtrend, because a single day bounce back cannot put copper into an uptrend market, so there is no clear confirmation. As a trend follower, you always know that, and we can say that we always know that we cannot trade against the trend. So until we get a very clear confirmation that the price can move higher, then we will go for a reversal in strategies. So the first possible strategy is testing the trend completely and taking into the account the major resistance zone. 4620, one major resistance zone, 4660 and 4720. Till 4720 you can expect crude to continue its downtrend. Any sustainable price action above 4720 and a closing above 4720, then we will decide what we can do after that. Based upon the price action that is going to happen for this complete week, we will fine tune our strategy, and what we can do is that you can go for a selling till this zone. That is a one possible way of testing this trend completely. And again we are saying whenever you are going for an average, so because if the price is expected to open, you can see that crude price is expected to open more or less around the same zone. You can see 4600 to 4580. This is a zone where you can expect the crude to open, and also there will be a minor change in the price opening based upon the rupee value also, just because we are posting this presentation and well before the currency market opening, and also the commodity market opening. Just based upon the NYMEX price direction, we can predict the price opening to be somewhere around 4,580 to 4,600. That is not going to be a major change in the price opening. So what we expect is that we expect selling, but you can see the stop loss zone. If the price is opening around 4,600, we know that the market will be in downtrend till this zone. So what we need to do is that we need to average at a proper resistance zone. We cannot put all our exposures and whatever funds we have in our trading account, we cannot use it here. We need to split it up and we need to use it accordingly. And again we are saying that whenever you are averaging, so it is going to be a 120 point average. Whenever you are averaging, please try to book profit for the average lots at regular time interval. That means that if you are going for a selling around 4,660 and 4,620, if you are going to take 2 lots, and here if you are going to take 2 lots, and here if you are going to take 2 lots, and it is going to be a 6 lot average. If the price is coming from 4,660 to 4,620, if there is a 40 point profit, which is equivalent to $1 in NYMEX prices, so just book the profit, let the market run, and just hold this another 2 lot. If the price is, this is the best way whenever you are trading. It is a best strategy to protect our profit and also to minimize our loss. So after making a good profit last week, what we need to do is that we need to protect our profit, and we need to look for a consolidation zone like this, where we will use all our exposures and skill to pick this zone, and we will make a good profit after that. So what you can do is that the possible strategy is that 4,720 can be targeted, and we will see the price action what is going to happen in the continuous week, and then we will fine tune if there is any confirmation. As far as the trend is concerned, we expect we expect crude to continue its downtrend. Let us see what's going to happen during our trading section, and thanks a lot for all your support. And also you can notice the target zones, and we will also mark the target zones. Just a minute. 4,500, and can notice that this 4,520 can be a very potential target zone, and this was the low, and this is going to be a good zone for us, 4,460. And why we are saying this 4,460 can be a good zone is that it marks 76. If the price is going to drop down from here to test this 4,460, it is going to be $76 in NYMEX. So that is a very key psychological zone. So it is going to be a good trading week for us in crude oil. So stay with the trend and don't go and bet against the trend. Use proper money management technique, and after the price falling 200 points, you don't go and bet out, use all your exposures here. Stay with the trend, go for an averaging, and use your money management technique very properly, so that will help you to protect your profit. So that's all we have for this week, and happy trading. Take care. Bye.